Welcome back to the CryptoWorld channel, everyone. My name is Josh, and right now, Ethereum is still trading within this sideways price range, but the new inflation numbers released today could change that. So I'll be talking about that in just a moment, alongside Bitcoin, which is getting very close to a break to the downside, which will set up a new price target we need to pay attention to. So I'll be talking about that as well in just a moment. Definitely stick around. First of all, we need to talk about the new US CPI inflation numbers that are just about to be released, because these numbers, depending on what they are, could potentially affect markets in the short term. And right now, based on expectations, these numbers are set to come in at 3.3% year-over-year inflation in the US. And so that will be a drop from what we saw last month, which was 3.7% year-over-year inflation. And so essentially right now, the market is pricing in 3.3% year-over-year inflation for the new numbers being released very soon, which basically means if we end up seeing 3.3% year-over-year inflation with today's new numbers, then that would be relatively neutral for the market, because basically everyone is already expecting that as a result. But if we see anything other than 3.3%, then that is where we could see a little bit more volatility in the short term, and basically the further away from expectations we get, the more volatility we'll likely see. And basically all you need to know is if the inflation number is well below expectations, that should be bullish for markets, but if the inflation number is well above expectations, then that should be bearish for markets. And so, for example, if we see something like 3% or 3.1%, that should be slightly bullish. If we see anything in the 2% range, that should be very bullish in the short term for markets. But on the other hand, if we see in the high 3% range, so like 3.8, 3.9%, or anything in the 4% range, that should be very bearish for markets. And this new number is released at exactly 1:30 p.m. in the GMT time zone today. And so from the time of recording this video, it's roughly around 1 to 2 hours from now. And so by the time you're watching this video, the new numbers might have already been released, in which case I'll be sharing those as soon as they get released over on my Twitter in real time. And so if you don't follow me over on my Twitter, then make sure you're doing that in the link down below in the description or in the pinned comment for real-time updates, just like these new inflation numbers as soon as they get released. And in case you're wondering why lower inflation would be bullish and higher inflation would be bearish, it's all to do with the Federal Reserve and interest rates, because basically right now the majority in the market is expecting for the Federal Reserve to hold interest rates where they are right now for at least the next few months, as in basically towards the middle of next year, and to then potentially begin cutting interest rates, bringing interest rates back to the downside in the second half of 2024, starting around the middle of next year. But based on what these new inflation numbers are, that can potentially change these forecasts for what we are expecting for the Federal Reserve in future Fed meetings. And so, for example, if inflation comes in well above expectations, like for example, if we see 4% inflation rather than the expected 3.3%, then basically that means the Federal Reserve will likely need to either raise rates further or at the very least keep rates higher for longer, which would be bearish for markets, because higher interest rates is bearish for markets. But vice versa, if we see much lower than expected inflation, if we see inflation come back in the 2% range, then we would likely see these probabilities change, but in the other direction. So basically, these probabilities would be forecasting interest rate cuts happening much sooner, and interest rate cuts reduce the cost of capital, which is bullish for markets. And so once again, I'll be sharing the new inflation numbers as soon as they get released over on my Twitter account. So if you don't follow me there, make sure you're doing that. Link down below in the description or in the pinned comment, because once again, these new numbers, depending on what they are, could potentially cause a lot of volatility in the short term. But anyway, getting into the Bitcoin part of this video, this is on the weekly Bitcoin chart, and right now the price of Bitcoin is still running into this important area of resistance, still sitting in between around 36,000 to 38,000. And so obviously, as I've mentioned recently on the channel, the price of Bitcoin is struggling around this resistance, which is to be expected. Obviously, I was pointing towards this area of resistance ever since we saw this breakout at around 27 to 28,000. And so it would be completely normal to see a rejection, for example, from this resistance before potentially continuing the larger bullish trend later on. Because obviously, even if we do see some sort of short-term pullback, that would be perfectly normal, because we usually see short-term pullbacks during a bullish trend, just like how we can see bullish reliefs in the short term during a larger bearish trend. But anyway, taking a look at the daily Bitcoin chart, and right now this bearish divergence is obviously confirmed here on the daily time frame. We have 3 daily candle closes now confirmed in the red, which basically cement these lower highs in place in the daily Bitcoin RSI, once again confirming the bearish divergence. divergence. And so at the very least, what this means is that we're due to see a bit of a pause, a bit of a break from this short-term bullish trend, which can play out in the form of either choppy sideways price action, if not a pullback over the next few weeks. And so essentially, based on this bearish divergence, which is now active on the daily time frame, I would not really be overly bullish just in the short term, as in over the next couple of weeks. But with that being said, once again, even if we see a pullback or even a short-term bearish trend like what we saw here or here, that does not necessarily impact the much larger trend here on the weekly time frame. And also the daily Bitcoin MACD is also showing a lack in momentum right now, which once again points towards a bit of a pause or setback from this short-term bullish trend. And if you're zooming into a smaller time frame, looking at the 8-hour Bitcoin chart, right now, as I record in this video, the price of Bitcoin is potentially about to break below this line of support, which was previous resistance, sitting at approximately 36.4k. But at least for now, as of recording this video, we still need to confirm this 8-hour candle close below that line of support. And in that case, if we do end up confirming the break to the downside, then the next line of support to pay attention to is this level, which is sitting at around 35.2k to 35.3k. And so basically from the current price of Bitcoin as of recording this video to that next support, that's nearly around a 3% move to the downside, which could be coming next if this break to the downside confirms. But for as long as we hold above around 35k, technically speaking, this could just be a small pullback within the short-term bullish trend on the daily time frame, like what we saw here or here, for example. But in order to form more of a short-term bearish trend on the daily time frame, like what we saw here or here, for example, then we would need to see a confirmed break back below around 34.6k, which would invalidate this hidden bullish divergence on the 6-hour Bitcoin chart. And not only that, if we confirm a break back below around 34.6k, then that would also form a new lower low in the price below this previous low, which would be bearish price formation. And so essentially, if we confirm a break below 36.4k, that is where we could start flipping more bearish again in terms of the short-term trend and momentum, kind of like what we saw here, flipping from a short-term bullish trend into a short-term bearish trend here on the daily time frame, for example. But remember, these short-term trends are just legs to the upside and pullbacks here on the larger time frames, like the weekly time frame. Obviously, we're still within a much larger bullish trend, even if we see a short-term bearish trend over the next few weeks on the daily time frame. And so basically, if we do play out that scenario where we do see a bit of a pullback here in the somewhat short term over the next few weeks, personally, I'll be using that as a buying opportunity because the larger trend is still currently bullish. But anyway, now getting into the Ethereum part of this video, this is on the daily ETH to US dollar chart. And right now, the price of ETH is once again testing this important area of support, which was previous resistance back here at these previous highs, which is sitting in between around $2,000 to 2030. And over the last half a week or so, the price of ETH has basically been within a choppy sideways price range in between that area of support I just mentioned and also this area of resistance based on this previous high, sitting in between around 2120 to 2150 approximately. And so while the price of ETH is in between that area of support and that area of resistance, just in the short term, we're looking relatively neutral. And as for the daily Ethereum price oscillators, these are still looking more bullish than bearish because, for example, the MACD is still showing some bullish momentum and the RSI has not yet broken the bullish price structure, forming higher lows and higher highs, which means obviously we do not have a bearish divergence here on the daily time frame for Ethereum, unlike Bitcoin. But with that being said, if we do end up confirming a break below that area of support, so confirming a break below around $2,000, then in that case, the next support to pay attention to based on this volume profile indicator is sitting in between around 1850 to 1890, so right at around 1.9k. So basically, if we see daily candle closes back below $2,000, we could potentially see around a $100 drop in the price of ETH back towards around 1.9k. But once again, a pullback after a lot of bullish price action is very healthy to see. It's very normal to see. And so if we do end up playing out that scenario and breaking below $2,000, then personally, I'll just be using that as a buying opportunity before potentially continuing this bullish trend later on. Because obviously a bullish trend does not contain 100% bullish price action all the time. It's very normal to see pullbacks along the way, just like how in a bearish trend, from time to time, we see some short-term bullish reliefs or short-term pumps within a short-term bearish trend. But on the flip side, if we actually bounce at around $2,000, we defend that level and ultimately break out above around 2150, then in that case here on the weekly weekly time frame, we are still forming this giant ascending triangle pattern. And the top side of this important area of resistance is once again sitting at around 2150. So that is the level to break here on the weekly time frame. And as for support, right now this ascending line of support for the ascending triangle pattern is sitting at approximately 1630, so just above 1.6k, which basically means even if we see a pullback all the way back down towards around 1.6, 1.7k, obviously even though in the short term that would be bearish, of course on the larger time frames we could still be forming this massive bullish pattern, forming higher lows. And so essentially overall we are potentially about to see a bit of a pullback, or at the very least some choppy sideways price action, especially due to that bearish divergence on the daily Bitcoin charts. But this is all just talking about the somewhat shorter term, as in over the coming days or weeks. But if you're talking about the next few months or the next 1 to 2 years, overall I'm still leaning much more bullish. But either way, whether we're seeing bullish price action, bearish price action, or we're simply chopping around sideways, you can still make a lot of money in crypto by watching these videos popping up right here on your screen. The video in the top left shows you how to make money if the price is bullish or bearish using AI, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.